Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Again, it is a nice Friday here in Seattle. I hope you guys are having a great day, great Friday, or whatever day you're listening to this on. It's a good day for a second reason because we got James Michener with us on the show. James is from Realty One Group. He has sold over 1,500 homes and with over $1 million in annual earnings. He also has a 26-unit rental portfolio with passive income of over $300,000 a year. So he's doing good. He's got a lot of wisdom to share with us. James, thanks for hopping on the show.
Yeah, thanks, Gabe. I appreciate that. That's actually gone up to 34 units now. I got some owner carries under my belt, which was amazing. So I'm pretty stoked about that.
Nice. Yeah, I'm excited to hear from it.
Yeah.
Before we get into the nitty gritty of your portfolio, we always like starting with stories on the podcast. So tell us, how did you get into real estate and how did you get to from where you started to where you are today?
Yeah. So about 13 years ago, I was sitting at my guardian father's house and we were having breakfast. And I said, "What got you into real estate?" And he's like, "Well, I wanted to sell something that made a lot of money and I could invest in at the same time. So kind of have three lanes of revenue coming in, right? Sales, owning, flipping." And so I was getting my master's degree at Grand Canyon University at that time and decided, I'm going to drop out and I'm going to get my real estate license. So I did that, got my real estate license. Then I took off for a year and taught English in Taiwan and did backpacking through Thailand and went to Mexico for 6 weeks, working on a farm for 3 months up in Montana. And then I decided to settle down. I met my girlfriend at the time, who is now my wife. And I was like, I'm laying down some roots, right? So got into real estate, learned how to do some cold calling, prospecting. And my first full year, I didn't sell a house until July 1st. After that, I sold 25 more houses for a total of 26. Made like $46,000 that year. The next year did 180, then 300, and then went up to 700, then 800, and then a million for the last couple of years. And I knew that the pace was going to be really hard to keep up. And I saw a lot of real estate agents going from commission check to commission check, and I just didn't want to do that. My guardian father owned 24 doors at the time, and I saw that he was able to retire around 56 years old. And I'm like, that's what I want. That's what I need to do, right? So I ended up buying a duplex. We lived in one side and then rented out the other side. Moved out of that, moved into a different house. We ended up renting that out after a year. And we just kept doing that until we had enough cash saved up to where we felt comfortable financing properties. And so the prospecting was really nice because it got me into like getting good deals, right? On owner carries, or somebody that's like, "Hey, I just want a cash offer. I don't want to list it. I just want to get out of it. This is the number I want." And I'm like, "Cool, I'll be your buyer for that." Right. So that ended up just going crazy. And honestly, there's a couple things I wish I would have done a little bit differently. Had a little bit better follow-up on my sphere of influence, but also I wish I would have taken more deals on and been a little bit more creative in the beginning. And then wholesaling, because there's certain properties I don't necessarily like, which are like mobile homes, manufactured homes, depending on what I'm getting into them, but other people do like those. So I wish I would have learned how to do wholesaling at that point, because wholesaling's been a game changer for me. The market's been a little bit slow the last 2 years for it, but I've really enjoyed it. So fast forward, now I loan out money because we saved up a bunch of cash. And so anything that's on the sidelines, I reinvest into private money deals, which is basically me lending to people to do spec homes, fix and flips, or building duplexes. So I really like that. That kicks off an income of about $250,000 a year on top of the 300 and so thousand a year for the cash flow from the rentals. So everything all together with I call it the real estate freeway. there's about 6 lanes of income that come in, and I'm doing the same job. There's just 6 different opportunities, and I'm capitalizing on whichever opportunity comes my way. So, yeah.
Nice, man.
Yeah.
No, I love it. And I like how it sounds like you have multiple. I mean, you mentioned yourself, you have multiple streams of income, you have multiple, fingers in the pot of ways of doing real estate. It's one of the
Yeah.
reasons why I like real estate so much is that there's not just one way to make money in real estate. There's so
No.
many different things that you can do. You started out being an agent, then you started investing, then you started lending.
Yeah.
Now it sounds like you're well, that's it. Investing, agent, lending, and your actual rentals.
Yeah.
So 300 a year for 26 rentals. That is is that your net income or your cash flow?
The cash flow is uh it's about 30 grand a month on
That's a
that.
lot for 26 rentals.
I paid off half the portfolio because I was scared that I would make a mistake. So I ended up paying half of it off. And then now what I do is I leverage those paid off properties with, I have a line of credit of $1 million. So I loan
Mhm.
that out to investors. So I make about 12 to 14% on that. And so I pay 7% to the bank. I loan it out at 12 to 14%. So it's arbitrage, right? So
Yeah.
yeah. So
So do you have a debt fund? Have you actually opened a debt fund, or are you're just taking a line of credit that you got from the bank and lending it out?
what is the debt fund?
Like you create the entity and then you start taking other people's money, lending it out
So
for
I have a couple of friends that will lend with me. They'll put money
okay.
in. My brother-in-law just did a loan with us. I'm trying to build that up. Honestly, it's one of my favorite parts of my business and my hobby, I would say, because I love doing this stuff. Like people are like, "Oh, what do you do?" I'm like, "Oh, I play basketball, lift weights, play with my kids, and then I love working." So yeah,
Nice.
yeah.
So yeah, I mean, it sounds like you've had success in all of these different endeavors. It's difficult to know which way to go right now. Which of the three do you like talking about most? Do you like lending? Do you like being an agent, or do you like investing in real estate and rentals?
My favorite is rental properties. Like,
Okay.
yeah, the real estate agent is just used for cash to get cash and then have something to be bigger part of, right? Because being a real estate investor can be pretty lonely, man. Like you're by yourself. I like working with teams and that, so I built a team of real estate agents. And then those team of real estate agents end up giving me deals. Other agents that know me in my network give me deals, and that turns into rental properties. But rentals are by far my favorite, as and pretty close neck and neck is loaning money as well.
Okay.
But the rentals
So
are
yeah,
where the wealth is made.
let's talk about the rentals. So on the investing side, you're only in single family. Do you do multifamily? Do you do commercial? Anything like that?
Yeah, so I have a triplex, and then I have seven, or sorry, I have eight duplexes as well, and then the rest are single family. I do own one condo in Sedona, Arizona. My grandmother's living in there, so I lose about $700 a month on that. But
Hey, but it's
it's
for
a,
grandma, so it's all
yeah,
good.
exactly. It's appreciated 400 grand, so I'm good with that, right?
There you
It'll
go.
be a good Airbnb.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So all on the residential side, you're not you
Yeah,
haven't gone into, a lot of people will get into single families, duplexes, etc. When they start investing, and then they start going looking at, multifamily, looking at mobile home parks, self-storage, whatever. But you're
yeah.
sticking with the resi, the small multi.
hmm
Is there a reason for that, or do you just it's just, you found your niche and you're just going for it?
It's what I know. However, I am interested in mobile home parks, and I'm definitely interested in self-storage. I think that's just, and I had the opportunity to buy one for like 1.3 million, but then he got other offers and he was bidding it up to 1.6. And I was like, I just don't know if I want to pull the trigger on that. But looking back on it, I probably should have, but there's a lot of other deals I picked up in between. But the commercial, you had mentioned commercial. I think commercial is going to be a really good space for where we're at, because our town is growing so much. And so commercial is something I am going to start looking more into. See what we
Nice.
can do with that. Yeah. I just don't understand it a whole bunch.
And when you say commercial, do you mean office, or are you talking, because commercial is pretty much everything outside of residential?
Yeah, anything over 5 units. Yeah, right.
Okay. Yeah.
Yeah.
And so you're talking about commercial multifamily or commercial, what part of
Buildings.
commercial are you looking for?
Commercial buildings. Yeah.
Okay.
Yep.
Cool.
Office spaces. But if I could pick up a 5-plex, 10-plex, 20-plex, I would pick that up.
If
for
it's
sure.
a deal, it's a deal. That's the
Yeah,
way it goes.
exactly. Yeah. Yep.
Okay. So on the single family side, how do you find your deals? Is there any way that is it mostly through networking, or do you guys still do cold calls? How are you getting the deals coming
Yeah.
to you?
So we do cold calling, which has been great, and just following up with like cancel expired listings for sell by owner. But the best deals I've ever gotten is through my network, right? Getting to know somebody, I buy a property, I stay in touch with them. I know that they have others, and then we just kind of stay in touch. They like me as a buyer. And so I get referred. Those are my sphere of influence. Will say, hey, I got a friend that needs to, their dad passed away, so they need to sell this house. Would you be willing to pay X for it? I'm like, yeah, I'll do that. Right. So the networking has been huge. And I don't know if you know Gabriel Hamill, but he's all about mobile home parks and then building relationships with people as well. So I'm working on that end a lot more.
Yeah, absolutely. One of the questions at the end will be related to that. And everybody always says, relationships are the thing. Real estate is really all about relationships. And it's crazy once you start talking to people, making friends, how many deals come your way. Even when you're not trying, it's the
crazy.
Nature of relationships.
It's crazy. 3 weeks ago, I got a lady that I had bought a duplex from. We stayed in touch for the 6-7 years that I've bought one from her on Elmer Carey. And we just stayed friends. And she texted me one morning at 4 o'clock in the morning. She's 93, 92 years old. She's like, hey, do you want to buy this duplex from me? Here are the terms, right? I'll carry for 15-year balloon, amortize it over 30. I'm like, yeah, I'll do that. Beautiful place. Didn't have to do anything.
She's 93 and she's carrying for 15 years. This girl, that's confidence right there. She's like, I'm not dying.
Yeah, she understands it. And so she puts it into a trust. And then once she passes away, it actually goes to a nonprofit. She's not giving her kids anything. So yeah,
that's pretty cool.
I know, it's crazy.
All right, let's talk about management. That's especially on the single family side. It's one of the reasons why most people don't like, once they get into single family investing, why they don't like it is because managing is a nightmare. But you're doing it pretty successfully. You said 30 plus rentals. So what's your management philosophy? Do you do it yourself? How do you manage the portfolio?
Yeah, I do it myself because I've noticed that a lot of people are like, yeah, I use a management company, but they don't do it the way I'd want to do it. Plus, I found that like if I manage it myself, I build good relationships with my tenants and they stay longer. Like my average tenant stays 5 to 6 years on a property. They keep it pretty well updated and take good care of it. It can be a headache. Now that I'm up to 34 units, and one of those is an Airbnb, which I'm not a huge fan of at this point. Like it's really, you're basically a customer service or a waiter for somebody. And I'm used to making the shots and not having to take all the orders. But, so that's been a headache. But as I've grown in the units, there's more stuff that needs to be done. But I have a good team of people, like my contractors, my handyman, that I just give them a call, or my tenants call them directly and it gets fixed. But I've been in this thing for probably 8 months now, where the projects are costing more for whatever reason. Like it's not like shooting fish in a barrel, right? And then there's a lot of stuff that's needing to be repaired on that. My wife and I were talking about that because I've been a little stressed out. Like, gosh, this is a lot at this point, But I'd have to pay somebody, 50 grand a year to do that. And it only takes like maybe 5 hours a month out of my time. And I enjoy it. It helps me keep a pulse on the real estate market. It helps me keep a pulse on my properties. And I think I save more money because I have my own my own team of people working on them as well. So yeah, but it can
that
become
makes
a
sense.
bear. It can become a bear, but
Well, the next step is always making your own property management company. So I'm sure that'll be in your future at some point.
I'm looking at buying into one actually right now. So yeah,
There you
we'll
go.
see how it works.
All right. Before we move on, let's talk about lending. It's something that a lot of investors like to do. One of my partners, that's his favorite thing, is lending out his money. So, how do you do it? What is the structure you use? And then, how do you make sure that you don't lose any money?
Okay, so I've done one or two loans that were second position. They've turned out pretty
Second
well.
position. Wow. Okay.
Yeah, I know. Yeah, but the majority of it, I do first lien position,
Hmm.
and I for the most part, I've done some deals in California and some in Georgia,
Hmm.
but for the most part, I just stay in Arizona. So I take first lien position. I make sure that the properties are a good value, that if I did take it over, it'd be something I want to own, right? So basically, when I'm loaning the money, I look at it as if it's something that I'm going to have to buy in the future. And is that something I'm going to be okay with? So, and a lot of this stuff comes through relationships, right? So we're going to say that a few times in this, but having good networking and good relationships with people, that when you lend somebody money, it's not like a real estate agent, right? Where they buy a house or sell a house from you and then their cousin's uncle gets their license, so they deal with them. They usually come back to you because it's a lot easier process. You both are familiar with each other, and they just want it to be quick and easy. And that's why they take out loans at 12%, because they need convenience at the time. So generally, I like to get anywhere from 15 to 30% down, depending on the property. But I'm really lending based off of the relationship that I have with somebody, uh, as well as the property.
Yeah.
So haven't lost any money yet, but there's
Knock on
stuff
wood.
that comes up. Yeah,
Yeah, I like that philosophy. You're lending to with the idea of owning it. And if
yeah,
you're okay with the idea of owning it, then it makes sense. Do
yeah.
you, when you're looking at, I'm assuming you're lending mostly on single family. Do you look at a certain age of the property, or do you care, if it's a property built in 1925, does that matter, or do you only look at 1980, 1990 or plus?
No, I just look at the deal itself and the person I'm lending to. Because, I mean, here in Prescott, if you buy a 1900s home, it's probably going to be historical and
Mm,
it's going to be worth a lot of money. And a lot of these old timers, they just want a certain amount and they want to move out. And the borrower is like, "Hey, I got a killer deal on this. Would you want to lend on it?" Yep, I'll do that. Twice moved mobile homes, I will not do. And mobile homes that are 1977, I try not to do those as well.
did you say twice moved mobile homes?
Yeah, so that's where like it was placed on a certain lot where somebody
Okay,
lived in it, and then they took that home and moved it to a different lot. It's not you can't get conventional financing on it on
interesting.
those. Yeah,
Huh.
so it's
Yeah,
just
I
something you want to touch.
yeah, I own mobile home parks, but I've never had to finance a mobile home.
Yeah,
I didn't know that the number of times that it moved had any effect on the ability to finance a mobile
yeah.
home.
The reason it does is because when they take it off the lot, they have to put it on a truck or another or
Things
a trailer.
jostle.
Yep, it moves it around. The integrity of the house isn't it doesn't hold up. So that's the main reason for that.
Yeah. And it's one of the reasons why mobile home park investing is great, is because they're pretty sticky. If you
Y-
put a house in a place, people generally do not want to move them. All right. It looks like we
Yes.
have run down the time, so it's time to jump into the quick question round. Are you ready?
Yep. Go for
All
it.
right. It starts with education, could be any form. I need two recommendations, one for general life wisdom and then one for real estate.
Okay, say it one more time. Sorry, I think that internet connection.
So we're talking recommendations for a form of education, could be books, could be movies, could be anything, but I need two of them, one for general life wisdom and then one for real estate.
Podcasts for
Okay.
sure.
Give
That's where I
me
learned a lot.
give me a single one, like a single podcast that you like.
I learned so much off of Bigger Pockets. That was my number one thing. I listened to it every single morning, and I usually listened to one episode, whether I was on a hike or driving in my car, working out. De- Definitely, yeah, would follow that. The other thing is getting part of like a mastermind
Mm-hmm.
or some sort of group. of like-kind people, I think is huge as well. For one, they set the standard. You can reach that standard, but you also learn these little tricks, right? And you learn not to pay the dumb tax on stuff.
Yeah,
Yeah,
nobody wants to pay
you're
the dumb
already
tax.
paying it.
Do you have a
No.
specific mastermind that you could recommend?
Um, you know, I'm part of Be Wealthy, so I'm going to start that in January. I've been to a couple meetings, and then one of my really good friends is in it, and she's done really well. When I went to that meeting the first time, I was like, these guys are doing stuff at a really, really high level, and they're talking about everything, right? And they have experts in every single thing. So if you want to build a private money company, you want mobile home parks, you want that would be one. Gabriel Hamels as well, which is a tribe of, I can pull it up here, but Gabriel Hamel has one as well. And it's I can give you the name of it, which he's just so awesome. It's 0 to 100 is the group.
Awesome. So 0 to
Yeah.
100 and be wealthy. I always
Yeah.
like getting good mastermind recommendations because that's, it's difficult to, it's like finding a mentor. It's difficult to vet them unless you have talked to somebody who's gone through it. They say like, yeah, it's a great experience, all that kind of stuff.
Yeah, my advice would be go to a meeting with them first before you sign up. I spent $25,000 on a mastermind, and I did it because of the person that was running it. But they were just doing ones and twosy deals, and I'm like, I thought if somebody invested 25 grand, they would be doing some pretty good work. So, yeah, that was my big bad on that.
Yeah. All right. Next question is about the US. It is a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Northern Arizona. I love it. Yeah, I think it's great. A lot of people, Phoenix is growing so fast, and a lot of people will come up here for, 4th of July, or they'll come up here for Christmas, or, some part of the summer, and they fall in love with it. So there's a lot of good jobs down in Phoenix. So they're buying second homes up here. More people are moving up here because they can work down in Phoenix, or they can work remotely, but still need to be kind of close to where they can jump down there. So I absolutely love Northern Arizona for
Nice.
that aspect. Yep.
All right. Next question is for your younger self. So let's go back to the James who had zero experience in real estate. He was just getting started. I think you said 12 years ago. But go back to him, look him in the eye, give him one piece of advice moving forward.
That's really good. Look at creative financing.
Nice. I like it.
Yeah.
And you're talking about seller financing, lease to own, that kind of stuff.
Yep. Sub two, wraps, all that stuff.
Yeah, I feel like the more tools you have in your tool belt, the easier it is to get deals done. If you can only think through the lens of getting a loan from a conventional bank and buying the property, it's really difficult to get deals done. But once you start thinking creatively, you have all these different tools that you can look at. It's really easy, especially if you can communicate that to the seller and help them understand why it's beneficial for them and you.
Yep.
All right. Next one is about lessons learned. Not every deal we get into goes the way we expect it. In fact, a lot of times something will go wrong, but that's where we learn our greatest lessons. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
It's one that I'm currently in. And I bought the property because it's downtown Prescott, and it's a cute home. It's going to appreciate, but the amount of work I've had to do with the foundation and whatnot, I wish I just would have gotten more quotes from contractors and maybe taken a little bit more time and really, really used my network to find the right people for it. Because now I spent 90 grand on the foundation. We redid the concrete sidewalk and the concrete driveway, and those are cracking. And it's just, I don't know. Yeah, I wish I would have been thought about that a little bit more and got the right people. And for me, on that project, I wish I would have pulled more permits for it in case I had to turn it over and sell it.
Interesting. Okay. So the lesson was pull more permits and then get more quotes. It sounded like
minimum. Use my network to find good contractors. Yep.
Yeah. Contractors, it's like one of those things. Once you find a good one, you got to hold on to them. They're like gold because
Yes.
it's difficult to find good ones, and there are
It's
plenty of
very
bad
hard.
ones out there. And they're
But
the
treat
ones
them
you,
well, pay them on time and do like communicate with them and be nice. Like they're not your slave. They're somebody that like you need to help you get further in your
Yep.
business. Yep.
Absolutely. This next question, I'm not sure if it's something you actually do, and I'm going to ask it anyways. It does take money to make money in real estate. So raising capital is one of the biggest skills you can learn. Do you raise capital? That's the first question.
I do not raise capital. I've been able to work really hard in my sales position as a real estate agent and fix and flipping properties. So I've been able to be self-funded on my
There you
stuff.
go.
Yeah.
So the answer to what is your favorite way to raise capital is make your own money.
Be myself. I like just counting on myself. No partnerships. Just do it myself.
Yep, I like it.
Yeah. Not saying
All right.
it's a bad thing, but yeah.
Yeah. Everybody has their own way of doing real estate, and making your own money is definitely a safe way to go.
Yep.
All right, that brings us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a twofer. Where can they find you? And then what can they expect when they reach out?
Facebook is good and Instagram. So you can just look me up, James Michener, realtor, or just James Michener, which is Michener. Reach out, ask questions. We could jump on a call, and I love talking about real estate. So just let you know, if you reach out on a Sunday, I'm probably not going to get back to you on Monday or until Monday or Tuesday. So I save those times for my family.
There you go. I will put that link in the show notes. So if you guys want to reach out to James, just click the little more in the description. It'll pull down that full description, and in there you can find his links. All right,
Cool.
James, that wraps it up, man. Thanks for hopping on the show.
Yeah, thanks, Gabe. I appreciate you taking the time.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.